How to Become a Profitable Trader in 2025. Bit of a cheesy title, but it'll do the job. Let's have some coffee with Rob. Come into the office with me today. Let's talk about a trading strategy that I've used for at least the last 30 years that's made me profitable in the markets. But you're probably all sitting there expecting me to take you to the charts directly and show you a system, to show you some squiggly lines and tell you that you're going to make millions this week, and that you're going to become a rich guy just by trading. And I hate to disappoint you, but that's not what you're going to get. Not today, not this time, because that's not what trading is about. You see, at the end of the day, you've done a few courses and you've paid I don't know how much you paid, and you've been told that the squiggly lines are going to make you money. They're going to give you a win rate, and you're going to be so successful in the markets because of the system that you've been given or that you have. And at the end of the day, that really doesn't work. All the system does is it gives you a high probability trade. Now, I always tell you guys that the market is a 50-50 game. And there are some people out there that clearly disagree with me. They make some really sad comments about it, which are not really intelligent, guys, because at the end of the day, what you have to understand about the market is the market's made up of buyers and sellers. And all of those buyers and sellers, 100% of them, actually want to win. Would you believe that? Would you believe that every single trader in the market actually wants to win? That's actually quite insane, isn't it? When you think that you've got a little system that's not going to give you 70%, 80%, and 90% win rate. You are now suddenly better than all the pros. You're suddenly way ahead of everyone. You can now take the world on. Now, you haven't yet understood that you're not trading against lines and candles and little things like that. That market, the money doesn't fall out the sky. All the money in the markets is provided by, guess what? Investors, traders, people in the market, real human beings, not robots. Got these guys that make bots that think they're so clever. Telling you that the market's this and the market's that, and this eventuality and that eventuality, and working out some kind of mathematical formula to make their bot, and telling you you know nothing and they know everything. And I hate to tell you those guys, a robot can't see what's happening in the world. It can't see the geopolitics. It can't see the fundamentals. It can't see what's going to happen next. All it can see is the figures. It's all it can do. So it can only trade based on the information that you give it at the end of the day. So what you really need to do is you need to obviously trade it yourself. Now, the problem with any one given system is pretty simple, and that is that every system works. Every single system that every person who gave you a course, every trader in the market, every mentor, everyone that's taught you how to trade has literally taught you correctly, because every single system in the market works. I know we use the simple price action system in our trading, and those of you that have been with me, and by the way, guys, those of you who don't know me, I'm Rob, and for those of you who do know me, welcome back. Sorry, taking my time introducing myself. Same as I never ask you guys to subscribe, or like I always forget, but it doesn't really matter. At the end of the day, the problem is every single system works. Now, if you think about this, if every single system works, how is it on earth possible that you've got a 70% chance of winning and the other guy's got a 30% chance of winning? That's not right, is it? Effectively, you've both got the same chance of winning. In other words, you've got a 50% chance of winning. And if you look at how things work in life, all your odds are, you're taking a high probability trade, but the odds are still that if you take 10 trades, the high probability is you will lose 5 and you'll win 5, leaving you with a break even, which really makes no sense if you think about it, because what's the point of trading if I'm going to make nothing? And that's where the strategy comes in. And the strategy is simple, and we're going to go over the business plan pretty soon, but I'm going to explain it in detail. But the basis of it is simple. Lose less on your losses and make more on your wins. And you're going to say, oh, it's the old 2-to-1 ratio thing. Well, it's a bit more complicated than that. And it's a bit more in-depth than just, oh, you must make 2-to-1. It's kind of, yeah, you're on the right track, but it's not just 1-2-to-1. There's a lot more important details that you need to know about this business plan. But first, let's think about the strategy that you're using. And by the way, guys, if you want a free Forex book, there's one in the description there for you, by the way. Just go and grab it and go and enjoy it, eh? So here's the thing. You've got a system and you trading this system. Let's say it's the support and resistance system, or let's say you're simply trading trend lines, or you're trading MACD, you're trading Fibonacci. Doesn't matter. And let's say you know you've got a high probability trading system. You've got a win rate. Of course, if you trade it on those demo accounts, then you're gonna win because, you know, it's not that difficult. But when it comes to real money, this is where it all changes. This is where suddenly the mathematics goes out the window and the fear and the psychology starts coming into play, starts taking over rather than the maths. Now, the maths behind it is simple. Let me tell you, every single trading strategy and system that's on the market out there, a primary school child could learn it. A 4-year-old, a 6-year-old could go out there and learn the system. This system is easy, guys. Come on, let's be honest. It's a few squiggly lines. And once you've learned where to put the dots, it ain't so difficult, is it? It's actually quite easy, really. The difficult part is managing it. That's the complicated issue that nobody seems to understand. Nobody's taught you this. Nobody's come to you and said, this is what you need to know in the market. They've taught you how to trade with a system that's going to give you a win rate. Now, anyone who knows me well enough will know that I also don't believe in a win rate, because a win rate is absolutely worthless to me. I do not care what your win rate is. It's coffee with Rob, so let's have some more coffee. That's always good, eh? Now, why don't I care what your win rate is? Well, it's simple, really. And it's as simple as this. If you've got a 9 out of 10 win rate, you're probably walking around boasting to everyone that you're a genius. You've got a 9 out of 10 win rate. You can win 9 trades out of 10. And if you can do that every single time, wow, that's amazing. But if you do have that kind of win rate, it's because of this scenario. And that is, for the 9 trades that you win, you're probably taking a tiny little win. Let's say you win 9 trades and you win $10 on each trade, $10 in each trade. And you're like, wow, I made 10. And then the 10th trade comes along, and I can guarantee you the person who trades like that cannot control their losses. And it will go down to a couple $100 in loss. And you know what they'll do? They'll dollar cost average because they can't take that kind of loss, and then it will get worse and it will go down. It will lose $1,000 because they move the stop loss down, so-called stop loss that's not even there. And then they'll have a 9 out of 10 win. 9 trades. You've won 9 trades, but you've only won $90, and on the 10th trade you lost $1,000. Now you tell me how that computes. Just do the maths, guys. Just tell me how that is profitable. Tell me how you're making money with a win rate. So a win rate, I rest my case. A win rate, I don't want to hear about it. It's worthless. What you need is profitability. You need to make a profit in the market, guys. That's what it's about. It's a business. And the other thing I want to tell you guys is you're not going to do this in a week. You're not going to do this in a day. You're not going to do this in a month. Learning how to be profitable in the market will take you most likely, on average, probably 2 years. For those that are telling you you can do it in a week, you know, some people are lucky. Maybe some people hit the nail on the head early, but most don't. Most go through this process of believing that the squiggly lines will make them money. Most go through this process of believing that the win rate will make them money and the course they did will make them money. And you get these guys that will teach you all these technical aspects and all these abbreviations, and you'll think you know everything about the stock markets because that guy sounded so clever. And at the end of the day, it's not going to help you because you don't have a business plan that makes you profitable. All you've got is a win rate, a high probability trading system. Now, you know, in every single video, I give you the high probability trading system. Guess what? I'm not putting it in this video because it's all in all my last videos. And that's not what makes you the money anyway. Today, I'm just talking to you from the heart, and I just want you to know what the strategy is about. So let's go through the strategy. Let's go through the strategy step by step so that you understand how you can actually, and I mean actually, become profitable. Now, you don't need a pen and paper because besides the fact that you can come back to this video and watch it again, because I'm not going to take it away, you also don't need a pen and paper to write a business plan that's basically 2 steps. So the first step in this business plan is the following. Once you have your price action strategy, once you have your strategy for your high probability trade, you want to go and take a trade. But now, what you will normally do once you've learned the system, once you've learned the high probability system that you're using, is you'll just go and take trades willy-nilly all over the place, expecting to maybe win some, maybe you expect to lose some, maybe you don't. First thing you got to understand is you're going to lose some. Good loser, yeah, you got to understand that losses are important. So now, what do you do to overcome this scenario where you know you're going to take losses in a market where you need to win. Simple, really. You take the size of your account. Now, everyone's got a different account size. So I don't want to, they've got guys saying to me, but I've only got $5,000. Others saying to me, but I got $5 million. And okay, so we work it in a percentage-based scenario. Now, there's two ways to work. If you were going to have a funded trader account, for example, and there is a link in the description if you want one, but you don't need one because you can only lose $2,500 on, say, a $25,000 funded account. So just take $2,500 cash and put it in a cash account and work with that. And then don't use the 1% principle, use a 10% principle maybe and trade it that way and see how that goes. But the reality is this. If you have a $100,000 account, let's say you've got a $100,000 account. Now, the thing to understand about this $100,000 account is if that's the account you create. Let's say you do well and it goes up to $150,000. Don't change the account size to $150,000 unless you really want to, because you might want to take that profit at the end of the year. So keep it as, in your mind, a $100,000 account. Even if it goes down a bit, it's a $100,000 account so that we can keep everything on a level playing field. We don't want to be changing that week in, week out. Now, what you do is you say, I'm going to risk 1% of my account on every single trade. Now, this is not written in stone. If you want it to be 2%, if you want it to be 10%, if you want it to be 0.5%, that's entirely up to you. But the hard and fast rule is keep it the same on every single trade. That's the difficult part. Keep it the same on every single trade. So if your stop loss is now $1,000, then every single trade you take needs to have $1,000 stop loss. I don't see it needs to be exactly, it could be 1,010, it could be 999. I mean, we can't get it exact every time. I'm talking about general area like we do with our support and resistance areas. I mean, how can you get it exact? Now, you've decided on your stop loss amount, and in this case, it's 1% of your account, which is a $100,000 account, and we're going to trade $1,000 on every single trade. I know you're going to say to me, but the stop losses are in different places, and that's the point. That's the point, because now step 2 of the business plan is, how do I apply this $1,000 stop loss? Oh, really easy, guys. What you do is, the first thing you do is you look at a trade that you might think, I want to take that trade because the setup looks good, the probability looks good. You know what? I'll probably make money on that trade. You say, well, that's the trade for me. How am I going to approach this trade? First thing you do is go and look at the trade and say, well, what area would I say the price would be invalid? An invalidation area. What area of this trade would I look at it and say, well, this is no longer a trade. If the price gets here, trade's completely worthless. Look for that spot, because that spot is going to be your stop loss. It might be below the last low. It might be below the support or something to that effect. Put your stop loss in there and you say, that's where my stop loss is going to be. Then you work out back to the cost, how much $1,000 is and how many contracts, points, shares, whatever you will get from that invalidation, from that stop loss to the cost. Then you work out the size of your trade. Then you want to make a take profit of around 2 to 1. It can be 1.5 to 1. It can be 3 to 1. Doesn't matter. The big thing about your profit, guys, is it has to be realistic, because otherwise your risk to reward is a complete waste of time. You've got to look at risk to reward. You want a good reward for a little risk. Point is to lose less on your losses. So if you look at the trade and you can only make $50 profit on a trade with $1,000 stop loss, just run away. Don't do it. So now you're looking for a trade that's going to give you a $2,000 win, and not with difficulty. It's got to be a reasonable trade. You've got to look at it and say, well, that's achievable. Okay. Now you've got a trade. So now you take the trade. Now you've got a trade that's got a $1,000 stop loss and a possibility of a $2,000 win. You're trading on the 4-hour charts, because that's what we trade on here. We prefer that. You can trade on the 1 hour. You can trade on the day. If you want to trade on the 5 minutes, keep in mind, trading is risky, and 60 to 80% of traders do lose money. And if you don't like risk and losing money, you really shouldn't be trading. And if you're trading on 5-minute charts, 99% of traders do lose money. So just keep that in mind when you're trading. So now you've got your trade that's 2 to 1, $1,000 loss, $2,000 win. Trade goes into a loss and it starts going down, because that happens quite often when you're trading. I don't know if you've noticed that, but when you're trading, it frequently will go into a loss before it goes into a win. There was once somebody who said to me, you know, Rob, when you're taking your trade, look for where you want to put the stop loss and put your entry point there. It actually worked a few times. But when you put your stop loss in the right place, you don't need to do that. So anyway, goes into a loss. First rule is don't dollar cost average, because that's just going to end in tears. And the second one is don't move your stop loss away, because when it gets to your stop loss of $1,000 loss and it wants to take it out, just smack yourself on the head if you want to move it. Because think of this, when you took the trade, was that not an invalidation area? Was that not an area where you said the trade's useless if it gets to that area? So why would you want to move that stop loss away and stay in that trade? You have to take the loss because that's the point of the strategy. You're going to lose 5. You're going to win 5. Point is you want to make more than the 5 you win. Get this. Now it goes into profit. It goes $300 into profit. Don't sell. Now you're sitting there with your hand like trying to click the mouse. You want to click the sell button because you've got a $300 profit and you're thinking, I've got to get out of this. I'm making a profit. This is great. No, because then you've got a whole mishmash of small profits again. No, leave it. Sit in your hands or take a brick and whack your hand or something so that you don't press sell. What you do is when it gets up to about $700, $800 in profit, then you take your stop loss, move it up to break even, maybe even a couple $100 in profit. And you say, well, now this trade's costing me nothing. It's a free trade. And as it goes up further, you move the stop loss up behind it. So if it goes up to 1,500, you move the stop loss up to maybe 1,000. Goes up to the 2,000 target. Don't sell when it gets to target. Move the stop loss up right up behind it. And if it comes back and takes it out, you made a profit, a good one, and you made target. But if it keeps on going, you make some more money. Not difficult. With that system, you will have a whole mishmash of trades where you get small profits, which you would have taken anyway, because you were sitting there trying to sell it anyway. Because sometimes the price comes back vigorously and it takes out those stop losses in profit, and you make $500 or $200 or $700 and instead of the 2,000. But it's okay because you would have sold there anyway, and at least now you're not unhappy about it. At least now you know you tried and it didn't quite get there, and then you got a smaller profit. Point being, what you want is to make the 2 to 1. In other words, if you make $2,000 on 5 trades and you lose $1,000 on 5 trades on each trade, then you would have made an overall grand total of a $5,000 profit over the 10 trades. So you're making a grand overall profit over all the trades. It's the psychology of trading, and if you can follow it to the T, you will make a success of it, because that's what it's about. It's about getting your mind right, getting your fear receptors right, and not running at every opportunity, not getting scared when it starts to lose, or not getting even more scared when it starts to win. You know, there's no worse feeling than actually selling out at $200 profit and watching it go up to $5,000 profit without you. It's actually worse than stop loss. It's actually worse than actually taking a stop loss. You'd be better off taking a stop loss than watching that. So also, if your trade is taken out at stop loss and you think, ooh, it's going in my direction again, let's get back in. Do me a favor, don't get back in. If it gets taken out a stop loss, you know what? Close your eyes and look for a new trade. Because seriously, guys, revenge trading is one of the most disastrous trading methods ever. It's one of those things when you get back in because it's going back in your favor because you believed in that trade before, now you still believe in it, you get back in the trade, you know what it does? It immediately goes against you again and it takes you out. That's cost traders more money than I can think of. So understand this. I know a lot of you guys, or a lot of guys out there, will give me a lot of grief about the 50-50 because they just don't understand it, and they talk about these disparities in the market and all the rest of it. And it's because you don't understand that there's human beings in the market. It's because you haven't quite figured that out. You're still looking at it as a chart and a screen and maths and figures and stuff like that. You have to understand that everyone behind the markets is money buying and selling. There are people out there buying and selling. Big institutions, retail traders, all kinds of different people are buying and selling in the markets. Now, a lot of guys will turn around to me and say, no, you're crazy with your system and blah, blah, blah. Pro traders don't have stop loss. That's true. You're totally right. Pro traders don't use a stop loss. When you say a pro trader, that's not me who's been trading for 30 years. I'm a retail trader. Pro trader is someone who's qualified to work at JP Morgan, for example, in their trading desk and trade with millions and millions and millions and millions of dollars. They're not trading, they're kind of investing. And their job is to find liquidity in the market. Can you imagine putting an auto stop loss or a stop loss on trades with hundreds of thousands of shares or hundreds of thousands of points or, contracts or whatever the case. You can't. You can't sell that much stock in seconds or minutes or whatever the case. So they don't use stop loss. What they do is they hunt out liquidity so that they can buy and sell that huge chunk of stock. That's the difference, guys. They're not trading like you and me with $50. They're trading with hundreds of thousands of shares. So they can't have a stop loss. It takes... If they go to buy, and when we click buy, it's like, ooh, there's your shares. We buy 1,000, 2,000, 5,000. It's cool. Now try buying 500,000 shares at one shot. See how that works out for you. Just look at those, the volume available, and see if there's enough available there to sell you the stock you want and how much you're going to pay for it. Because as you're buying it, you realize you're pushing the price up, so the price is going to go up and up and up as well. It's a very tricky game. It's not something you just do. So, for someone to say that to me as well, sorry guys, that's not how it works. Doesn't work like that. There's real people with real money and real things going on in the market, and liquidity is what it's all about. You're looking for those orders. You're looking, for you to buy something, someone's got to be selling something. Try and get that in your head. For you to buy something, somebody has to be selling something. And that doesn't just apply to Forex, commodities, indexes, stocks, and things like that. It applies to life. If you want to go and buy a car, somebody's got to be selling it for you to buy it. You can't just buy it out of fresh air. Now the same applies to the markets. If you want to buy stock, it doesn't fall out the sky, it doesn't fall out of a computer screen. Somebody is selling it to you. That's why it's a 50-50 game, guys. There's a reason that guy's selling it. Why do you think he's selling it? Do you think he's selling it because he wants to make you rich? No. He's selling it because he wants to make himself rich, dude. Why else would he want to sell it? Oh, he's done with it now, so now I can have it. No, he's selling it because he believes that's the end of that. That's done. It'll probably get cheaper now. So as far as I'm concerned, I'm going to sell it off now. Because if he knew it was going to double in price from there, he would keep it, wouldn't he? Because he wants to make more money. Why would he sell it to you? Think about that. So now you want to buy it because you believe from that price it's going to make more money. You believe it's going to get better because everyone takes a trade with a high probability that they're going to make a profit in the future, whether it be the 5-minute, the 5-year, the 10-year future. It doesn't matter. You're buying it because you want to make a profit on it in the future. That's general with Forex, stock, indexes, commodities, whatever, is to make a profit. You're investing. Even if it's for 5 minutes, you're investing in it for that 5 minutes to make a profit. The guy is selling it to make a profit by the same token. So grasp that concept and then understand why people buy and sell stocks and why it's a 50-50 game. Why there's a chance it can go either way, because there's a chance that both of you could be right, or there's a chance that one of you could be wrong. Hello, think about that. That's just my rant for today. I didn't put any charts up today. If you want to see the charts, go and look at my other videos. It's there in every single video. How to trade price action, how to trade with trend lines, everything that you need to make a profit in the markets and to get your system, your high probability system up and going. What I spoke to you about today is how you need to get your mind around it and how the psychology will make your trading better and how you need a business plan and a strategy to become profitable in the markets in 2025 or forever. Been doing this a long time, guys, and the sooner you see the outside picture, the bigger picture, the sooner the hammer will come down and you'll go, oh, the light bulb just came on. That's how it works. It's not about the lines, guys. Not about the win rate. It's about becoming profitable. It's about using your psychology. It's about having a strategy to win in the market. I want to thank you guys for watching, and I want you to have an absolutely marvelous and fantastic weekend, as we'll come back on next week and we'll do a few more live shows and we'll have a few more questions, and you're welcome to come and ask me questions about this as well. Till next time, guys, thanks for watching. Cheers, ciao, and bye.